The U.S. stock market is officially open for trade. Joining me now is Marcus Baudet, partner at BIG Capital. Marcus, welcome to the New York Stock Exchange.
Thank you very much. Thank you for having me.
So trading has just kicked off. What are you going to be looking at most closely in today's session, especially in the tech sector?
Yeah, I think that we'll obviously be looking at a lot of tech, since that's what we focus on. Looking at some of the things that are happening with some of the tech players, looking at Oracle, looking at CoreWeave, what happens with them today, coming off of some strong gains over the last couple of days, just to see if that infrastructure play keeps moving ahead.
And we understand that you have some excitement about deals in the tech sector. Can you share more about that?
Yeah, absolutely. I think that the tech sector, at least what we're seeing, is a strong fourth quarter is going to come on the tech sector. In general, deals have been a little bit slow in the third quarter, but we felt that tech still outperformed the market in general. And given things that are happening in the market, given the lower interest rates, we definitely see a pickup in M&A activity towards the later half of the year in the tech sector. We're excited about that.
And what's most exciting to you about that?
I think what's most exciting to us about that is I think that you're starting to see some new opportunities open up. I think over the last couple of years, the IPO space was a little bit dead. And I think that you've seen in the last quarter of this year, things start to pick up. You know, you had the FIGBA IPO and things. And I think that as the M&A market starts to heat up, you're going to see both the existing companies start to acquire some of the smaller companies in the space. I think you're going to see some consolidation in the space, both maybe in the data center space we're looking at as well. Is going to see some consolidation. And I think over the long term, we're going to see some cross-business consolidation. I think you're going to see some of these tech companies start mixing well with some of these energy companies, because that's going to be, I think, in the next play coming in the longer term, the next year to the next 18, 24 months.
All right, and big tech earnings will come out later this month. What are you expecting?
I think that earnings are going to hold strong. I think that because in terms of AI, you're going to see some pullback on that, because people are going to say, okay, well, are the earnings there yet? But I think from the core infrastructure players, the data center players, the energy players, the chip manufacturer, I think NVIDIA is still going to be strong on their earnings, because all of that is coming. We all know that AI is coming, despite some of the overvaluation on the VC side of things. I think the core businesses, the ones that are actually listed, are still going to do very well, because everyone knows that that's going to be transformative over the next couple of years.
Do you have any concerns about tariffs in the tech sector?
I think that right now the main concern of tariffs are really the hardware players. So, you know, you have your chip manufacturers and, again, your data center folks in terms of the equipment that they need to purchase to fill these data centers. So if there's any change in the tariffs or any unforeseen changes in the tariffs, I think that's where there will be some concerns. I think that the current tariff environment has leveled off a bit, and I think people are okay with the current tariff environment. I think that most of the negotiations have taken place, but if the administration changes position, comes up with a new surprise tariff, obviously I think there'll be some resistance and some pullback in the sector.
Some of our guests have shared with us that we are in an AI stock bubble, perhaps. What are your thoughts on that?
Well, I think that from a valuation standpoint, I think we're getting to a bubble type market. But I think that one of the differences, I've heard a lot of people compare this market to the dot-com market, but I think there's a difference in the two, in that I think during the dot-com era, you had a lot of these hyper-valuations happening on the public side. So companies were going public with simply an idea. Whereas in this market, there is some overzealous valuations, but a lot of it's still happening on the VC side. There aren't too many AI startups on the public side of things. And so once I think that correction occurs within the private market, I think you're going to see more realistic valuations, but I don't think it's going to have the dramatic effect on the market that, for instance, the dot-com bubble burst had. I think it's just more of a correction and people saying, okay, are these valuations do they really make sense at this point in time?
The Fed is expected to cut rates in October. What do you think this would mean for M&A in this sector?
Again, that is part of our excitement as we look towards the end of the year and the M&A activity. Once borrowing costs have already started to come down with the last rate cut, I think with another rate cut, it's just going to drive more. The cost of capital is obviously going to be cheaper. It's going to drive more M&A activity. And we're expecting, or our belief is that over the course of the next 12 months, we're going to come down at least a full point, as opposed, I know they were a little bit cautious on the last rate reduction with the quarter point. I think we might get another quarter point, hopefully a half a point reduction the next go round. But I think over the course of the 12 months since the last one, we're going to look at probably at least a point down.
All right, and how are you advising investors to approach tech for the rest of 2025 into 2026?
I think that you can be bullish on tech. I think that, again, AI is going to be transformative, and so any of those players in that infrastructure space on AI, again, the data center space, the chip manufacturers, all of that I think is still going to be strong. And then as the market starts to kind of shake out on the AI and some of these other companies, you can see which ones are really providing core value to customers. I think that's where you're gonna really see things, and not just hype. So you have to look at where are they providing core value? Are they really providing some serious functionality? Is the AI really contributing to some change in the functionality of the product or the user experience or something like that? Because that's where you're going to see the value of those companies. And I think after the shakeout, which is going to happen in the next 6 to 12 months or so, at least that's what we feel, that's what you should be looking at. So you stick with infrastructure, you stick with back end, and you stick with good companies that are actually providing real products that people can use and need.
All right, Marcus Baudet, partner at BIG Capital. Thank you so much for joining us at the New York Stock Exchange.
Thank you again for having me. Appreciate it.